What's up, guys? Welcome to the live stream. Well, today's CPI has the potential to be a major market mover and could set the tone for the rest of the week. But first, we're going to talk about Monday's fake out that caught literally everyone off guard. Well, definitely caught me off guard anyway. So today I'm going to break down Bitcoin's false breakout from Monday, why it reversed so hard after that. We're going to analyze why Ethereum is showing incredible strength despite Bitcoin's pullback. We're going to deep dive into today's CPI data and what it means for the markets. Plus, I'm going to show you my Pionex bot results so far from the past week or so and show you how you can gain access to those bots. And stick around because I'm also going to be taking your chart requests live. So start thinking about what you want me to analyze for you. And whilst you're doing that, be sure to smash that like button nice and early because it really does help to get our videos around the internet. And I'm getting this error notice, but I can see you guys comment, so I think everything is okay despite the error. But yes, we want to get these videos around the internet because I don't understand this whole European summer go away and do nothing vibes. Like, I'm from Australia and we don't do that. Like, we work all the time, but right now, everything's dead because all the Europeans are just by the beach living their best life, which is kind of so cool. But it does mean that YouTube views are down. So yeah, it really helps out when you like the videos early and subscribe if you're not already subscribed. By the way, if it is your first time here, welcome. But yeah, it will really do me a solid and help me get those views up while everyone is enjoying their life by the beach. And so I'm going to get started straight on Bitcoin because I understand that we're expecting this summer chop, and then when you have a look at altcoins, that kind of hasn't really been happening. But I wanted to zoom out on Bitcoin on the daily time frame to show you that when it comes to Bitcoin, we actually are in the summer chop. So yesterday we had this, was it yesterday? Yeah, yesterday we had this big move up here that took out these liquidation levels at around 122K, and we've closed back within the range. So right now, all we have here is these two spikes to the high. So far, the bottom of the range isn't really proven yet because there's only one touch to it. But when you actually zoom out on the daily, this does qualify as summer chop because it started in July. And so yeah, that's when the summer chop is, right? So this Bitcoin could essentially just range for the rest of summer. We're always looking for signs within the range, sorry, of where it will break out next. And whilst it's ranging, that's pretty easy to identify because really all you're looking for is a higher low within the range, and that would be bullish, or a lower high within the range, which would be bearish. And so we have these two really significant levels of liquidity above and below the range. So this one up here is between 123.5 to 126.5, and this one down here is 103.5 to 107.5. And a lot of people talk about the 110 range being a target as well. I actually just wanted to show you something else. Let me just quickly hide these liquidation levels so that it can be clear for you. So there's this other indicator that I sometimes use, not often, but I do like it. I mostly use it on high time frames. It's called Ichimoku. And basically when price is when price is above the cloud, it's bullish, and below the cloud, it's bearish. And it kind of like, I'll probably bastardize the explanation if I go into too much detail. So I won't do that. But the moral of the story, what I wanted to tell you is that within the cloud is where you would expect it to act as support when price is above. So if at some point in time, this could take a long time because of the daily time frame, but if the price did start coming back into the cloud, if you have a look at where the cloud support is right now, it's at that 110K region. So a lot of people are talking about Bitcoin potentially retesting 110. And then when we had this move up here, or no, I think it was this daily candle, people sort of started to think, oh, what happened to 110? 110 is still a possibility to happen. My tea's here, Dorothy. My tea is here. And I've also had my honey, but it's not working yet. But I have to just not be too animated and then I don't cough. So I'll try to just keep my voice like, what do you call it? Monotone and boring. But anyway, so because of this, like I still have my, what's the word? I'm still prepared for 110K, let's say that. And for as long as Bitcoin is in this range, I'm still prepared for 110K. And so all of my bots on Pionex and that, they're set up for that to happen. So if it does happen, it won't matter about the bots. Everything is fine. This is sort of how I've set the range. But if we break out to the upside, like I said, there's this liquidity up here between 123.5 and 126.5. And that's what I think it would go for next. But I don't really think it's ready for that right now. Yeah, KB says, I don't see your stream on Twitter. It's so annoying. Like I set it up to stream on Twitter and then when I hit go live, it says there's an error. Do you want to cancel the whole stream? So I'm not going to cancel the whole stream. I just have to accept that for some reason it didn't go to Twitter this time. Very annoying. Like it's temperamental. Sometimes it works, sometimes it doesn't. So anyway, I just wanted to show you that about the Ichimoku because I think there's still buy the dip opportunities potentially to come, and it may not be, you know, like this week, but I think some point in August, potentially even September, you know, it doesn't really matter when it happens, but I do think 110 is not a target until we break out clearly out of this range and hold above it. So yeah, just keep that in mind for higher time frame analysis. Now I want to talk about, do I want to talk about the 1 hour? Yeah, so let's talk about the 1 hour time frame and what happened over the weekend. So I think I did a stream on Friday and we talked about this price action if you happen to have caught that stream. And I was questioning you guys on whether or not you thought this blue vector right here was level 3. And some of you did, some of you did. It was about 50-50. To me, it wasn't. And I gave my reasons as to why I thought a level 3 was yet to come. And I also gave an area of interest for a buy zone based on that, which I've removed it now, but it was basically, let me just draw it out again. It was basically within this vector candle. And so we got basically a triple bottom to that range, which was a perfect chance for the entry. And then it did end up breaking out. So then I counted this here as level 3. Now, the thing about weekend price action is it's much easier to identify the trap when the price just consolidates. When the price trends on a weekend, it's very difficult. So that's what caused me to basically get the false move week beginning wrong, because I think I shorted here in this range because I thought this was level 3 and it was done. And yeah, it ended up breaking out to the upside. So that was a failed trade. But I did redeem myself, which I'll show you in the end. And so this move here to me was a false move week beginning. Now, what we have to understand, let me go down even smaller time frame to explain this. So what we have to understand about this type of false move week beginning was that this week, Asia was not open. So that left Asia very, the dishwasher is off. That left Asia very open to, I don't want to say manipulation because that's not the right word, but just open to something abnormal happening than what we usually expect Asia to do. And this is what happened. So Asia ran nearly a 3% range. That is considered abnormal in the method that we trade. And it ran basically a very long move to the upside. So when I saw this, when I woke up and saw Asia doing this, immediately, even though I got stopped out on my short position, immediately my mind went to, okay, that is a fast move on a manipulated or closed session. And that leaves it to, how do I say, Anastasia, English, that leaves us open to a higher chance of a following session, being UK or US, reversing the price. Because this leaves a very large imbalance in price action when it happens like this, and it happened on a closed session. So for me, that made me very suspicious of this move to the upside, and it made me think they're not going to leave that imbalance like that in a new session. They're going to come back and get it. So in the end, what I did was I started to look on the 5-minute time frame for my entry for potential reversal. And so you can see here, that's where, so this was the Asia session right here. And so that's where I saw this stopping volume candle that created the initial high of the day. And then right in the gap of Asia to UK, which is where I love to get my entries, is in the gap between sessions is the perfect, most perfect. Like if you take one lesson from this stream, take this as it. The most perfect time to get your entries is in the gap of the sessions. If the second side of a M or W presents and it's at the right level. So when I saw this, it was a no-brainer to take a short position. And that's basically what I did. Now, my original target was only here. So it was just going to be a small little day trade. But, you know, once it all happened, I was able to stretch it out. So I've closed this now, even though I think there's a very big chance of more in it. I have closed it because I went out for dinner and I didn't want to have to watch it over dinner. So anyway, that was a good trade. It's a 6-to-1 trade in a day, essentially. So yeah. That was good. But now what does it mean? So let's go back to the 1 hour when everyone is mega bullish. Still not set up my bots, procrastination problem. Lion Daddy, do you know to set up your bots, all you have to do is click a link and then go copy bot and enter an amount of money. Like, that's it. That's it. Like, come on, dude, you can do that. Anyway. So let's go and have a look at what's happening now. So we know we have CPI. I'll talk about that a little bit later. But this is proof of what I said, that this was a manipulated move on a session close. It was going to be more than likely that the following open sessions were going to take it back, and they did. And now we have this problem where you see this level here. This is the high of the week at 119.094. And the high, that is the highest point that price went last week, Sunday to Sunday. And that becomes a key level in the new week. And so what we're seeing right now is price, it's kind of doing two things, which makes me very, very cautious about CPI later. So first of all, price is rejecting under the high of the week and also the 50 EMA on the 1 hour. That's usually a very bearish sign. But I'll tell you why I say I'm very cautious about this is because at the same time that it's doing it, let me draw this out. Do you see how it's creating this curved pattern as opposed to a higher low and drop pattern, or as opposed to just consolidation? See how this price action here is curved? So the thing with that is, wait, what am I doing? Wrong button. Hold on. Crisis. Okay. So, the problem with that is that creates a different pattern, which we call here at TTC a H pattern, or H pattern if you're not Aussie. So it's this, right? So you can see literally looks like the letter H. And the thing with a H pattern is it's a total reset. Yeah, Dennis says, is that a H pattern? So it's a total reset. So it doesn't necessarily mean bullish and it doesn't mean bearish. What it means is that you get the first point that creates the first, that creates the first side of the H, right? So you get this bit, and this bit here is what creates the first side, this candle right here. And then what it means is there's a ton of liquidity there when the price spikes into it, and they didn't collect all of it on the first attempt. So they move out and then they come back to collect the rest. And that's why it's basically a neutral pattern, because when they come back to collect the rest, that's where you then have to start to investigate the candlesticks at the return to get the idea of whether they're going to drop it lower or they're going to reverse from here. So right now, that's what we're doing. We're returning to the first peak. This is close enough. And so what this means now is that you should go down in smaller time frames to start looking any time from now, but it's going to be risky because the closer we get to CPI, you don't want to be opening trades 1 to 2 hours before CPI because it's a significant news event, okay? So probably you're going to be better off post CPI, but if the trade setup is very, very clear, sometimes you don't need the news to know what's going to happen, okay? So let's see if we can figure that out. So now that we know that that's what's happening on the 1 hour, so see here, you've got this big stopping volume candle. So that's the first peak of the H. And now we want to identify what's happening in the second peak. So what else can I add to this to give me an idea? First of all, when I look at this on a smaller time frame, this now looks like, let me draw it out for you. Where is my drawing here? So this to me now looks like an M formation. Okay, so an M formation would mean that this through here yesterday, I've got to think now. Hold on. I got to think. Okay. If I was on the I am on the 15-minute time frame. So on the 15-minute time frame, this was the M, which was the 5-minute M. Hold on. Okay. This was the M, which was the 5-minute M. And that led to the level 1 drop here, which is a qualified level 1, Anastasia, level 1 drop through here. And then we had the retest. See this white dotted line? That was 50% of Asia's level yesterday. So we had that retest there. And this here then would qualify as level 2 after that 50%. So that should mean that there's another drop to go. If we're just simply following the model as the model is. And now in the consolidation after level 2, we have an M. So technically there should be another drop to go. But what disrupts the model is a news event. So we can't say that's definitely going to happen because we not only do we have a news event, we have a significant news event. So come on, Lion King Daddy, cool press copy. You guys are funny. So now let's put all of that aside and let's just look at liquidity today. Okay, so liquidity today, the initial high of today is here for Asia at 109,245. The new session, UK, which still has two hours to go, granted, but so far today, UK has not taken the liquidity above Asia's high, right? So that's this area here. You can see price has not returned there. The liquidity below, so the initial low of the day is 118,337. And we can see that UK has taken the low liquidity. So yeah, what do I think is going to happen? I need more information. I know what I think is going to happen, but I don't want to say it just yet. I want to investigate a little bit further. So let's look at heat maps. Number one, the highest level of buy orders is still at 110K. So that lines up with our macro analysis, okay? I'm not saying I think 110K is today. Wait, this says refresh. And it always worries me when it says refresh that we're not looking at the right data. So let's just give it a second. Version updated. Okay. Yeah. So 110 is still there. So that's still a long-term target, but it's not relevant just for CPI today. Closer to price, we've got let's say around 117. Yeah, about 117 and a half. And we've also got 114. So then where does that put us on the chart here? If I just throw this in, 117 and a half-ish. Yeah, see, when you think about how much price moves per level when it's in a trending level, 117 makes sense. So do I want to look at anything else? Let's just quickly look at liquidity. One sec. Yes, smash the likes while you are waiting for this to load. Sayed says we also have the CME gap. So yeah, wait, should I come back to that? Yes, I will. Let's look at that now. So I'm going to add this onto the indicator, which is, it's not exactly, oh, it's already there. So I need to be on a lower time. Wait, why isn't it showing then? Oh, because it's down here. Okay, so CME gap, you need to identify that on the CME chart. And so because we trade futures, we don't really look at that. We look at the US settle price because the CME chart price is never the same as the futures chart that you're trading on. So if you want to see if a gap is closed specifically, then yeah, for sure, you go to the CME chart. Let's just quickly find it. I have it in one of these things. I think it might be in this one. It's BTC1, isn't it? Yeah. So let's just zoom out on this. Okay, so this is the gap here. And then, so to close the gap, we would have to come down on this chart to 117,455-ish. Okay, that would close the gap. But it's a bit different on a futures chart because the prices aren't exactly the same. So we use what we call the US settle price. And that what that basically means is it's the price, you can see it's this gray line here. It's the chart, it's the candle, bloody hell, Anastasia. It's the last candle of the close of the US session on Friday. And so that is between 116.7 to 116.852. So see how the prices are a little bit different? So it doesn't really matter. At the end of the day, it doesn't really matter. But yes, that would close the gap. So 117,500 was one buy order, 117,500. And what were the other ones? 114, which is significantly low. And I think if we went down to 114, A, that wouldn't happen today and it wouldn't happen as a result of CPI, but B, it would mean that these levels are going to feed up in time frame. So yeah, look, I mean, it totally could happen. There's like, when you look at the daily time frame, taking a short from the top of the range is, there's no better place to take a short at the end of the day. So, and if you held that down to 114, wait, why are you freezing? Hang on. I want to go back to the daily. That was a mistake. Wait, my trading view is malfunctioning. Oh, sorry, Cage. Cage says no US update and he's done it all. I actually had to go live earlier today. Sorry, guys. I know this isn't my normal time, but me, like an idiot, I have Pedro in town and I booked a dinner for us without realizing that I'm supposed to live stream exactly at the time that I booked the dinner. So that's why I'm a bit early today. But at the end of the day, if we came down to 114, look at this. Look at where 114 is on the daily time frame. It would line up with the daily 50 EMA eventually, and it would create the higher low that I talked about. So it would be bullish if we ended up coming down there. Like I said, not today, but at some point if we did. And so therefore, shorting from the top of the daily range, it's not a terrible idea. But anyway, so I went off track. What do I want to go back to? Yes, to the levels. So now what's above price? Nothing. There's nothing above price until way up at 123. And so that would have to cause a reversal as a result of CPI. So look, here's what I would do. So we've swept Asia's low liquidity now. That is a tick. If we're going to move to the downside and eventually into this 117.5, what you would be looking for is for price to reject 50% Asia. So that's around 118,800. That would be such an easy short because it's a clear lower high after an M formation. An M formation in the consolidation, you're only at drop 2. Like, it really just makes sense. But just really, my big caution is to just be aware of the timing because, yeah, it would be easier or better or safer to take a trade like this after CPI, but CPI may also cause it. So if you really want to get it, you're going to have to be ready to act very fast. Now, if CPI does something incredibly nuts and changes the trend, that's also possible because, like I said, the only thing that disrupts the model is a news event, and today's news event is significant, so it absolutely could disrupt the model. So if that were to happen, then that would be the reason why we've swept Asia's low liquidity. And the news, if it came out positive, would break 50% Asia, and that's where you would go long. Don't take that. For just to be clear, when news events disrupt the model, I don't change how I trade. So what I mean by that is if I look at this and I can see that there's 2 drops and there's an M formation and we may reject 50% Asia and there's buy orders down here and I'm expecting level 3, then the only trade that I would be looking for is that short position down to, let's say, the 800 EMA. That's it. If it gave me something else, I wouldn't get involved because I'm not smart enough to try and guess what the market maker is doing when they change their mind. And that's when it leads to bigger failed trades. So I just wait until levels become clear again and everything is following in the order that it should, okay? So I'm just being clear about that. I will tell you what might change the model. That doesn't mean I'm telling you should trade that. So that's how I feel about Bitcoin. Now, was there anything else I wanted to show you on Bitcoin? I don't think so. Is there any questions about Bitcoin in the chat? Cajun's putting his feet up for CPI to trade the 30 seconds. Hello from London. Yes, let me know where you guys are from. Hit the likes. Yes, thank you guys. I love how you remind everyone. Alpha Dog Pedro. Okay, so I think you guys are good with Bitcoin. I think that makes sense. So let's just take a second. I just wanted to show you something. I want to talk to you a little bit about Femex because I just want to show you what makes Femex quite different actually from other exchanges. First of all, they're really transparent with their proof of reserves. So when you go to their website, you can just click here where it says proof of reserve and you can see exactly what they're holding. So they don't keep that secret. It's no sketchy business, no hiding funds. They have complete transparency. Femex has also been around since 2019, so they're not brand new, and some of these newer exchanges, you know, they're a bit clunky. So Femex has been around a long time and they're really solid. They also have a built-in tax tool to help you organize your reporting, and this comes up a lot in my community for people that live in countries where they have to report their crypto trading and what a headache that can be. So this definitely makes it much easier. But here's the exciting part. Femex right now has a really incredible campaign exclusive for you guys, for the TTC fans. So basically it's a deposit and trade reward, and depending on what you deposit you can get a bigger bonus. So $100 and one trade gets a $20 bonus. A $500 deposit and one trade gets a $100 bonus. A $1,000 deposit and one trade gets $200 bonus. And then if you wanted to go bigger than that, if you deposit 10,000 and then you hit futures trading volume of 10,000, you'll get a 99. Why didn't they just make that 1,000? That would have been so much easier for me to read, but it's a 999 bonus. And then the last one is if you deposit 15,000 and do 50,000 trading volume, you get 1,299 bonus. Yeah. So to get that deal, you just have to make sure that you follow the directions in the description of this video really clearly. Okay, because there is a certain code that you have to enter. It's right here, and only that code will activate it. So grab that if you're interested. If you're looking for somewhere, especially if you do have to report tax on your trading, just grab that, follow the directions here, and you can unlock your access to those bonuses. All right, so I also wanted to talk to you guys about Ethereum, because even with Bitcoin's like significant drop yesterday, ETH was a bit of a boss. So I want to zoom out on ETH first of all. Let's go to the daily. So here's my opinion on Ethereum. Ethereum's just not getting the big pullbacks that I kind of want. So it keeps running away from me, but I don't chase price unless I get a decent pullback. I don't chase, I just leave it. Now I have long positions, as you know, but when it's moving in such a strong trend, I would rather open multiple long positions on the same asset than have long positions on 10,000 assets that I have to monitor, right? So let me just get rid of this liquidity here so we can see it clearly. Oh, I don't have it. Wait, do I? No, I don't have this. Hang on. Let me just put this into a folder. Okay. So I'm still expecting a level 3 on ETH, and I think we're in it now, but I don't necessarily think that it's finished. I think it might consolidate before it finishes when we're talking high time frame, so daily time frame analysis. Whether or not it pulls back, we'll have a look at that on smaller time frames. But this is basically my high time frame idea, and I do think that ETH will get to its all-time high at a minimum, like soonish, 1-2 months soonish when we talk daily. So yeah, that's basically how I see it on the high time frame. Now, why do I have this marked? That's weird. So when you go down to, say, the 4-hour, you can see here that it's just consolidating. And to me, so if you have one rise on a daily, sometimes on the next time frame down, you can see 3 rises, if that makes sense, in that one high time frame rise. So when I look at ETH on the 4-hour, then knowing that it's in a rise on the daily, I see this here as one rise, or this move. Then we had this pullback, and then I see all of this as the second. And so that means that this is just consolidating before what should be a third level rise on the 4-hour, which would complete the daily time frame one as well, and therefore has a really good chance of hitting my target. Now, the only thing I don't know yet, because there's not enough price action to know, is whether or not in this range here that is starting to build, that we will eventually get a stop hunt down before it moves up. So I want to be really careful of that and see if there's any chance. 4-hour doesn't tell me if there's a chance. So let's go and see what's happening on the 1-hour. Now see how clearly you can see on the 1-hour that it's just building that range. So okay, I'll tell you what's bullish about this range currently is the fact that you've got these equal highs here, many of them, and then you've got higher lows currently. So if ETH holds 50% Asia, the range may nearly be done. sorry. The range may nearly be done, and it may break out to the upside. Again, timing matters because of CPI, so just keep that in mind and don't jump the gun. But right now, Asia is holding 50% Asia for Asia. ETH is holding 50% Asia at this point in time. This candle is only just opened, so you're looking for a bullish engulfing in an hour for that to be able to say is holding 50% Asia. But if it does do that, it may actually break out. It may be done with this consolidation. Ideally, that we can make that decision after CPI. Let's go 15-minute. Yeah, 15-minute is just it's not my concern. So 1-hour is more my concern, and I'd be looking for how the 1-hour closes at that 50% Asia. Okay. I'm going to close off some things because for some reason should I close this? This one's probably taking out the most energy. Oh, so is High Block probably. Maybe Discord. No, the rest shouldn't be. Let me just refresh because we're getting stuck a little bit. All right, whilst I let that refresh, let's just talk about something else. So let's talk about CPI. So CPI is the main event of today. It's honestly one of the biggest potential market movers that we're going to see this entire week, alongside PPI and unemployment claims that are coming up on Thursday. So here's the context that you need to understand about that. The Fed continues to stick with inflation uncertainty as their primary reason to not cut rates. So that means if we get, why am I Annie Skywalker? That means that if we get below forecast reading today, that significantly increases the odds of a September Fed cut. And the market is watching this like a hawk. So let me break down the scenarios for you. Worst case scenario, if we get a high CPI reading, like I'm talking significantly above expectations, we could see stagflation concerns start creeping back into the market. And that would likely trigger a sell-off in the bond market, which historically has not been kind to risk assets like crypto. And that means that we could see Bitcoin head down for further drops, according to the model that we trade that I've just showed you. And it could mean altcoins go with it, potentially, except for ETH, who just seems to not care about anything right now. But that's scenario one. Scenario two is the ideal outcome, which is an inline CPI report, meaning it comes in right at expectations or maybe slightly below. And that could support a market rally. So the key things to watch are if core services can offset any tariff related inflation that we might be seeing. That's actually a really positive sign for risk assets. And the Fed has been crystal clear that they need to see consistent progress on inflation before they start cutting rates. A good CPI print today doesn't guarantee a September cut, but it certainly does keep it on the table. And so here's why that matters so much for crypto. Institutional money will be sitting on the sidelines. That's why it's a bit boring today, because they're waiting for this clarity on monetary policy. And so when we get that clarity, whether it's a rate cut or even just a clear signal that cuts are coming, we could see significant capital rotation back into the risk assets. So just remember that Thursday we get PPI and unemployment claims. So today is really just setting up the entire week's narrative. And if the CPI comes in hot, Thursday's data becomes even more critical. If it comes in cool, Thursday could be the confirmation that gets the market moving again. So Thursday, midweek reversal day as well, right? So, okay, with all of that in mind, as you can see, we're in a bit of a choppy range. So let's talk about the bots on Pionex just quickly. Because what you can see, so these are my current live results. So even though we're in this choppy range, even though we had this pullback, we're doing pretty well on the GridBots because they thrive in a choppy market. There are two, I have not made these available for copy trading, these two right here. These are a higher risk one that I'm testing right now. So I haven't made them available to copy yet because I just want to see if this is a different strategy to the ones that I have made available for copy. And I want to see if it's a good strategy or not, essentially. So if it turns out to be a good strategy, I'll do it on more coins and I'll make it available for copying. But everything else that you see in green here is available for copying right now. So this just goes to show that, you know, GridBot strategies, they work really good in this market when we're essentially just choppy. They're kind of crushing it right now. So if you are wanting to copy these bots, you can just simply go to the description of this video and all of the information is there. Also, people ask me about accessing from restricted countries. There is information there for you. Look here, just go here and it will tell you what to read in order to get that access. So don't worry about that. You can still get access. But the reason that I'm showing you all of this stuff is because I want to show you that there are other ways to profit in any market condition, including the boring sideways chop. But what's more important than just straight up copying my bots, which you can do right here, is understanding what you're doing when you do it. And so that's why I created this free course. If you haven't seen it yet, you can get access to this. Again, in the description of this video is all the instructions on how to get that free access. So just read that out, read that and copy those steps. But I created this, it's a very easy course. Like I know lots of you have done it. So if you're, Philip says, oh my God, release the Phil bot. All right, I'll do it for you. Yeah, but it's a very easy course. If you've done the course, just let people know in the comments how easy it was to do, because you can get through this in under an hour. It's 100% free. You just have to join Pionex using our link first. It shows you down here. And they also have bonuses right now as well, that you can get deposit bonuses so that you can try out these bots essentially with bonus money and just sort of get your feel around the platform before you use any of your own money. But yeah, it's so simple and so quick, but you need this because a lot of people think that when you copy bots, it's just, you just hit copy and then you don't think about it again. That's not how they work. When you copy a bot, you're copying at the time, you're copying the settings at the time that you've copied it. And if the creator of the bot changes the settings, it doesn't change it for you. So you need to understand how to do all of these settings yourself. And that's why I created this course. And let me just show you in Discord, actually. Let me show you, I think it would be here. Like there's tons and tons of results from our community that have been playing around with this for the last week or so and just having the best time with it, giving them a side hustle essentially in a market that's been fairly uncertain for trading. So yeah, check it out. It's very quick. It's very easy. There's no reason not to do it. And by the end of this course, you will know not only how to set up your own bots, but you'll then understand how to correctly copy bots as well. So anyway, all of that is in the description of the video. Check that out if you're interested. It's a good addition to your trading. So what I want to do now is take some of your requests. My bots are degens. Bots are keeping me sane, says Faith. Course was easy to do. The course is awesome. Best bot course ever. Love my bots. Most of my copy bots from TTC are red. So that would be because you only just started them. And that, again, if you did the course, you would know this. But they have to go red before they go green because they basically buy the dips. So in the moment that they're buying the dips, they're accumulating. And then once the dips are done, it goes to the top of the range where it sells them for profit. So bots always go red before green. A perfect example, that comment is, of why you should do the course. Okay, so let's have a look at some of these coins that you want. Aptos. Okay, let's have a look at Aptos. Do I have it on this list? Yeah, I do. Actually, that's a good reminder. So some of these things are coming into ranges that I put out in, we have a free Telegram, by the way, and it is linked in the description of this video. Just make sure you get it from there because there are a lot of fake Telegrams that say they're TTC and they're not. So anyway, if you wanted to join it, I put a couple of these trade ideas out on Sunday. And a lot of the coins are coming into the area of interest that I put out. And so that means that they're in the zones where you have to look for buyers to step in before you take the long position. At this point in time, Aptos does not look like something you should buy. When you look at this 4-hour candle, it's very, very bearish. It's got 1 hour to go. Unless miracles happen, it's probably going to close as a bearish candle, but it is right in the area of interest. Let's see if I can gather any more information on this range. Okay, so see, we've got this little what do you call it, like a little volume pocket here, like very low volume. So when price returns to something like that, it doesn't like to stay there for too long. So I kind of like that zone there, which would be the bottom part of this, the body of this vector candle. Why do I have 61.8? Where did I measure it from? Oh, from here. Okay, so it also lines up with 61.8. So it's about $4.43. Yeah, look, anywhere around there kind of looks good to me, to be honest, as long as the buyers step in. So if that's the zone, let's go down a smaller time frame. So what we need to see now, because it's in a downtrend, is we need to see weakening of that downtrend within the zone. So I would be keeping an eye out. Yeah, I'd be keeping an eye out anyway. sorry. Anywhere from 4.46. Well, look, it could even be down here because of this. Yeah, to 4.4, let's say. Look for buyers to step in there. It doesn't look finished yet because it is lower highs, lower lows. This candle is a lower low. But I would be watching this anytime from now because it's in the range, but potentially like get ready for it to come down here before you see buyers step in. All right, what else? Bots let me live my life. That's so cool. Bots are keeping my membership free. Yeah, totally. They can cover your membership, then your learning is free, right? All right, someone said curve. Curve. So actually, I remember looking at curve, and I don't love the price action right now. It feels like it wants to have a bit deeper of a correction on a high time frame, although, you know, long term still definitely bullish. But I mean, this is a head and shoulders if you look at it. Hang on, let me draw it out. Okay. Here, right? This is a head and shoulder. And it's just yet to break the neckline. But I mean, I would welcome that. If this had a deep correction, I would welcome that. I would love to get more curve cheap, you know? And so if it does break the neckline, yeah, if it breaks the neckline, then I'd probably be looking at an area of interest, first of all, to this candle right here. What's that going to be? 68 to 76 cent curve. That would be delicious. But again, it might not break the neckline. So we have to be prepared to look for support to hold at 0.86. And then if it does break below, then this becomes our area of interest, our first area of interest. And if we don't see the buyers step in there, because there's many other green vector candles here, we'll just wait a bit longer. But those would be the two areas that I would assess for buys on this. Definitely long-term bullish, and welcome any lower prices to buy more of curve, in my opinion. XLM, that's been the talk of the town, hasn't it? Hasn't it? Everyone's been talking about XLM. Okay, so how do I feel about this? I mean, that's essentially a 4-hour bull flag right now. You know, look, you know how I said before about the volume in the candles when I was talking about Asia? So see, that's what happened here. See how these two massive green candles, and that at the time would have caused an imbalance. And so two things happen when that happens. Let me draw it out what happens. So you have this first, how am I going to draw? Because I'm a terrible drawer. Let me just try and do it like this, okay? So price has a big volume spike, and then the first thing that can happen is after the volume spike, it chops like this for a while, and then it goes straight back down. People call that a Bart-Simpson pattern. It has other names in the TTC method, but Bart-Simpson is right. That's what it is. And that's because when you have this fast move up, it causes the imbalance, then we chop, and then when we move straight back down, we haven't rebalanced the zone. So what follows on from that usually then is we will consolidate. So the consolidation then rebalances the zone. And that has to happen because if we don't rebalance the zone, then every single time price revisits this area, it will be a fast move up and a fast move back down. That can't happen forever because then that's predictable trading, and then you make money and the market maker doesn't want you to make money. So simply that's what happens. Then the second one is basically a flag. So you have the fast move up that we have, and then instead of chopping sideways, you chop as a retracement, and the retracement essentially builds the flag that rebalances most of the zone, doesn't have to rebalance the whole thing, and then it breaks out. So what we're seeing right now is the rebalancing of these two candles, which is essentially a bull flag. So it is eventually bullish. Sorry. It is eventually bullish. And let's see where we can see liquidity on it because it's on this chart already. And ideally, we want the 50% area to hold because that's really bullish. And so far it is. But the liquidity is at the 61.8. So I would be looking in both of these zones for buyers to step in. The buyers haven't stepped in yet. Maybe it will be a post CPI thing. If you're lucky enough, 50% will hold. It has taken this liquidity here. So now the what you're looking for is that all they want to take? And you'll know that when you see bullish candles in this zone. If you don't see them, they're likely to be coming down for this before there's any reversal. So yeah, I would be keeping an eye out on both of these zones on XLM if you're wanting a long position. Okay, what else is here? What's your target for Link? Let's have a look at Link. I can't remember if I charted it because I remember last time I looked at it, it had just gone too far. Yeah, I did chart it. Go me. It had just gone too far. So, okay, so let me explain this. I can't give you a target until this pullback has finished because this is an Elliott wave. This is such a clear Elliott wave. And therefore, the target, the wave, wait, 1, 2, 3, 4, 5. The wave 5 target can only come when the wave 4 retracement is finished. So we are basically just guessing right now. So you can see I've got fib here. It's a very slow bleed now, which means this is very, very bullish. Hasn't come into my area of interest just yet, but let's just go on the assumption that it comes back to the 50 EMA. So this isn't a final target. Give me some credit because I can't give you a target until the pullback is complete, but let's just take this for educational purposes. So what you would do is, let's pretend the pullback goes to the 50 EMA. You grab your trend-based fibs and you go from the start of wave 1 to the top of 1, 2, 3, and then drag it down to the bottom of wave 4. And then your target is the 61 or the 78. So that would put it at 24.4 to 25.6. Now that's not end of cycle target. That's end of the Elliott wave target. From there, we might get a correction. This is why I think a deeper correction is coming eventually. It might not be this month. It might even be September. It's pretty normal for September to correct deeply. And when you have a look, a lot of altcoins that are currently in their wave 4 corrections, wave 5 could take us to the end of August, and then we get our big correction, and then we get the end of the cycle if the cycle ends when it's meant to, and we don't get the extended cycle that Pedro talked about on his video yesterday. So yeah, that's my thing there. But again, we would have to adjust this when we know where wave 4 actually does finish. And there's a lot of liquidity up here as well. So again, we would refresh that when it finished. But that's my basic idea. All right, let me do one more for you. Let me try and do something I haven't done before, and something I haven't even heard of before. Let me see if I can find one. Annie, is starting the bots now advisable? That's a good question, actually. So let me just quickly tell you how bots work. Again, this is in the course that is free, but let's just say price is ranging. Okay, so terrible range, Anastasia. But anyway, so price is doing that, and what your bot that you've set your bot range to be here a little bit. Damn it, I'm trying to be quick and I'm stuffing up. So you set your bot range to be a little bit below to account for liquidity hunts and a little bit above for the same reason. So what the bot does is it does most of its buying in the bottom 60% of the range. Let's just assume that's 60%. And then it does most of its, this is in the case of a long bot, it does most of its selling in the top of the range. So whilst it's running these grids in between, it's buying and selling all the time. Okay, so that's how you see grid profit. Let me show you actually here. If I go to detail, so see here how there's grid profit and then there's trend profit. So this here is the money that's in the market right now. So if I close the bot, I would collect this, but this will float up and down depending on the range, whereas grid profit is secured. That's my profit that I can withdraw if I want and keep it, or I can reinvest it into the bot if I like the bot, okay? So they're two different things, but this money here is, wait, no, this one here, the grid profit is the buying and selling of the grids here that have actually closed and given us that profit. And then this one here, the floating one, is grids that are open in the range that are still currently at work. And so that will happen the entire way. But when it gets into the top part of your range is where it takes most of the profit. So when you ask me when is a good time to start a grid, you don't have to particularly try to pick the bottom of a range. That's trading. And that's where you have to be very, very accurate. Your best spot to start bots is anywhere when price is in the bottom 60% of your range, because you actually want it to be somewhere around here so that it can buy the dips here. It can buy these dips, right? And so whilst it's buying these dips, like I said, it goes red first. Then when it starts to go up, it turns green, and it takes some of those profits as grid profits, and it keeps the rest in the market, and it takes the major profits at the top of your range. So yeah, don't worry about being too picky about when to start them. Just make sure you're somewhere in the bottom 60% of your range. Okay. Did I answer what I was talking about with Link? Yeah, I did. I did answer the target. Wait, I did answer the target. So that's done. And I want to find something that I don't talk about. Wall Street has moved to the Hamptons for the summer. Also, Milan Hamptons, who does that? I know. Like, it's time to work. It's not time to holiday. All right, hang on. Let me see. Wait. What are we sitting on? A 1,000 watching. I'm so proud because this isn't even my normal time. That's incredible. Thank you guys. I really genuinely appreciate you showing up for me live. It really does mean a lot to me. And even though I'm dying of tiredness right now, this is the reason that makes it worth showing up. And 733 likes is amazing. Appreciate it so much. Okay, let's do IOTA. I haven't done IOTA. I haven't done it. So we'll do this one fresh. I don't think I've ever done it. IOTA USDT Binance. Okay, so because I've never looked at it, I need to, well, this is perfect GridBot range number 1. It's perfect GridBot range. So if you are trading them, I would set the range down here and to here. Wait, hold on. Okay, that's very, very easy. Nice low leverage GridBot, very easy, good range. Now, as far as an actual investment, wait, let's look at IOTA BTC. Oh, it's dead. I don't know what this does. I have heard of it because I know it's been around a long time. But when I look at this chart just as a chart, it's dead. And I don't know if there is a fundamental reason for it to turn around. That's more of a Pedro question. But chart alone, I don't like this, especially when I see things from prior cycles that in this cycle have created a new low. That's not good. Like if something has done a full retracement back to a prior cycle or whatever, a prior pump, that's fine. But a lower low, not for me. Not for me, Jerry. I don't like anything about this. Because even look at this. So this is where we return to, which means that this was probably the highest volume vector. Oh, is this one? Leading into it, it was kind of even. It's kind of even. Okay. Oh, yes. Okay. So that candle started the volume spike there. So then when we return to it, we got the initial move out, good sign, but we got a lower high, a very lower high. This is terrible. I don't like it. If you have these bags, sell it. Sorry. That's my non-financial advice. Oh, thank you for the super chat. All right, I'm going to do it for you. I've been avoiding. No, have I been avoiding? Not your one. I've been avoiding this other coin that everyone asks for, but I'm going to do it for you because you did a super chat. Okay, this say this is a head and shoulder too. This is, see, left, head, right, and the right is equal high to the left. So this should come down more. This should come down more. Your key is going to be if it holds the neckline, which I don't do diagonal necklines, so I only do straight. So I'd be looking here. That would be the only hope. There is a lot of liquidity here for it to take. So your best case scenario, if you wanted to be long on this, is that it holds its support at 0.257 after taking this liquidity. So wait and see if buyers step in there. But because it's a head and shoulders, there is a chance of a further breakdown. And if that did happen, we would have to reassess at the time. But I also don't really love this trend. To be honest, it's yeah, it looks weak right now. It looks weak, but if you're long-term bullish on it, you want it to be weak right now so you can buy more, right? All right, guys, hope you enjoyed the video. Thanks for hanging out with me. I'll be back very soon. And yeah, I'll see you guys on the next one. Don't forget to check out Femex and also Pionex. And yeah, see you guys soon.